Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. It's Monday. What a Monday. We got the stock market back open. It's been up. It's been down, up, down. Very volatile today. We had the bailouts over the weekend. They're bailing out Silicon Valley Bank. I don't know. Who's the winner in that? Who's the winner in that? I guess the depositors, they get all their money back. $150 billion weren't insured. But now they get all their money back. Who wins? Well, I think inflation wins. I do. If you look today, you got gold way up, silver way up, Bitcoin way up. Everybody wants to get out of the system. Why? The system's broken, right? I think it's much worse than they're telling us. Now, just last week, Janet Yellen was telling us that the banks are all overcapitalized. They have so much money. Okay, well, what happened? We got 3 banks just went down this week. What happened? What really went wrong? Well, look at Forbes magazine came out and said Silicon Valley Bank is the best bank in all of America. Isn't that incredible? Moody's had a AAA rating. Silicon Valley Bank rated AAA. Of course, Jim Cramer, he put out the buy signal. Guy can never get anything right. But anyways, what happened? Well, it happened overnight. It happened in about 48 hours. In one day, they pulled out $42 billion. Had a bank run, right? Okay, so it's just wrong. Well, who was the losers, though? Who was the losers? Well, I think it's the taxpayer. I think it's me and you. Now, they'll tell you this isn't a bailout. It's not a bailout. Believe me, let's just say you went and bought a new car. You paid 50 grand for it. You drive it off the lot. You crash it. You total the car. Well, you bring them back the remains and they give you your money back. Well, that's basically what the Fed's doing. They're buying all this damaged goods at 100% of the value when it really should be half off. Now, who's paying for that? Well, it's going to be me and you eventually. It's going to be the taxpayer. Oh, no, Mike. Biden came out and said it's not the taxpayer. Taxpayer's not going to use any of their money. Well, no. We're going to print the money. We don't have the money, right? We don't have the money, so we're going to print. We're going to print more money, right? And inflation, well, it's going to take off, I'm afraid. But don't worry. In this short video, it's going to be about 15 minutes. I'm going to solve the banking problem. I'm going to solve the housing problem. I'm going to solve the inflation problem. Okay, but I do want to say that I think this contagion is not contained, not even close to contained. I think it's a lot worse than they're talking about. Look, we've had a Silvergate Bank go down. We had Signature Bank go down. We had Silicon Valley Bank go down. If you look at the stock market, First Republic looks like they're going to go down next. Charles Schwab, I'm surprised. They look like just the way the stock's traded. I don't know if they're in trouble or not, but I'm saying there's going to be some contagion. This is not contained, right? All right, well, how do we fix the problem? Look, we got a big problem, and the problem started, it goes back to 2020. Okay, February of 2020, what'd they do? Well, the Federal Reserve said that the banks don't have to keep any money in reserves. They just don't have to keep any money anymore. Used to be 10%, but now the Fed says you don't need to keep any money. You can take all your depositors' money, you can bring it to Las Vegas, you can gamble, and if you lose, well, we'll socialize those losses. Now, if you win, you get to keep the profits for yourself. Look at the CEO of Silicon Valley Bank sold $3.6 million worth of stock 3 days before the bank crashed. Now, if you're the CEO of the bank, wouldn't you know that the bank's going to crash? Is anything going to happen to them? No, this is America. Look, we don't have capitalism in America. I've told you that many times. We have corporatism. Corporations run the world. They're the big winners, right? They get all the money. They get all the bailouts, and who pays? Well, me and you, we pay. Okay, so let's solve the problem. Okay, this would stop the inflation problem right away. Stop the inflation problem. You require every bank to keep 20% in reserves. Look at when you put $100 bill in the bank, is it too much to ask for them to take $20 and put it in their vault? Is that too much, really? No, you put 20% reserves on every bank. Inflation's going to come in because the banks aren't going to be making those wild, crazy loans anymore. The money's going to tighten up a little bit. Yeah, it'll be painful. 20%, is that really ridiculous? I mean, what's going on is ridiculous to me. Zero reserves, go to Vegas, bet red or black, you win, you keep all the money, you pay the bonuses to the CEO, pay the bonuses to the top executive. If you lose, well, hey, taxpayers, we need some more money. Look at taxpayers lose again today. I'm not that happy with it. Now look at, I'm in Silicon Valley. I have a lot of friends that were going to lose millions and millions of dollars, and they're happy about the bailout. Because you can't make rich people poor in America. We don't want rich people being poor. That's just impossible. That's what would have happened. We can't have that. So we do the bailout. All right. So let's get talking a little bit about this housing market. This is going to be the crash of a lifetime. I mean, it's amazing to me. People don't see it coming. To me, it's just common sense, right? It's just common sense. Okay. So here's what's happened. All right. So in 2021 and 2020, okay, those 2 years, those were the big boom years for the housing market. Now, why were the big boom years? Well, we got all the stimulus money, all the PPP money, all the unemployment money, and people took this money and they went and bought houses with it. Now, how did they put 20% down on the houses? No. 10%? No. What'd they put down? Well, they put down 3%. They got FHA loans. Now, okay. Now, here's how it works out. Okay, half the people that bought a house with loans, half the loans were FHA loans. Okay, 3% down. I mean, maybe they needed a 600 credit score. I don't even think they needed that. They probably could have done it with a 500 credit score because we were in an emergency situation in the pandemic. Well, do you realize all these are underwater now, right? All right, so people go, yeah, but they're locked in at this low rate. They're going to hold on to their house forever. Well, not really. They're not paying on these loans. Look at 10%, over 10% of FHA loans are now in default, over 10%. So half of the loans that were made during the pandemic are now, 10% of those loans are in default. Okay, so you're going to see a lot of defaults, a lot of the banks taking this back. Now, once again, an FHA loan is guaranteed by our federal government, which is me and you, which is the taxpayer. Okay, look, if you can't afford to buy a house, I don't think you should buy one. Now, this is my take. Now, how would I solve the housing problem? I'd require, once again, 20% down payments. Look, I'd require 20% bank reserves. That would solve our banking problem, solve the inflation problem, and I'd require 20% down payment on houses. I call it the 2020 plan, and you'll have perfect vision with it. 2020 will solve so many problems that we're facing in the U.S. right now. Look, this crash is coming, and it's going to be a monumental crash. This banking system, the whole system could come down, right? But no, don't worry. They just gave every other bank permission to go out and go to Las Vegas and get in the most risky assets you can find. Because why? Well, because you want to be a winner. You want to win big so you can get those bonuses. Look, I don't know what Jamie Dimon makes. What, $100 million bonus every year? I don't know what it is. He's a CEO of Chase, all right, but okay. But look at these bank presidents, they're all pulling in these big profits. Now, they're not doing anything but gambling with your money, the money that's on deposit. I want them to keep 20% of it. 20% of it, if you increase reserves that the bank has to hold on to in their vault, 20%, you won't have these bank runs. You won't have banks getting in trouble. Look, you reduce the reserve to 0%. What did you think was going to happen? What was really going to happen? I don't know. I think that there's going to be some problems. I think the problems are a lot worse than we're talking about. Look at the 2-year note went from 5% down to 4%. That's 100 basis points, and it did it in 2 trading sessions. This is telling you that there is some underlying problems here, that the whole system is in trouble. It's like an earthquake in the system. The system system can come down. It can be pulled down. The housing market, that could be 50% loss in houses, could be the least of our problems. Yeah, that's probably going to happen because you got all these defaults with these people that are buying houses with 3% down. I don't think 3% down is the right thing. Now look, when I was a young guy, now I know prices were a lot lower then, but I was buying $300,000, $400,000 houses, and I was putting down 20%. Now I saved up the money, and granted, once you get into a house with 20% down and the house goes up in value, you can pull out some equity and then you can roll it into another one. But 20% down will keep the housing market from collapsing. 20% down will hold up the house values. Now, I believe in real estate. I think real estate's a great place to have money, but it's not a good time to buy right now. Right now is not a good time to buy. Look, if you got $2 million in a paid-for house, right? That house is not going to go away. You got $2 million in the banking system that can be wiped out tomorrow. That can be gone in a day. The house might come down 50% from 2 million to 1 million, but you still got the house and you can still sell it for $1 million, right? Okay, so when houses come down by 50%, I'm not saying real estate's a bad place because we're in some tough times right now. Now, I do think that gold and silver are a great place to be in right now. You can tell people want them today. They're pulling money out of their bank. I mean, I'll probably go down to my bank today, pull some out, and see if I can find some gold and silver to buy. It's getting really hard to find right now. It really is. People aren't selling it because they're holding on to it because they're worried. They don't want their money in cash. I don't blame them. I think the dollar loses value every day. I know the dollar loses value every day. Look, once the Fed started back in 1913, right, the dollar's lost 97% of its purchasing power. Do I blame that on the Federal Reserve? Yes, I do, because the 100 years before the Federal Reserve started, go from 1813 to 1913, what happened to the purchasing power of the dollar? Well, it actually went up in those 100 years. How much did it go up by? Do you know it went up by 50%? It went up by 50%. Once the Federal Reserve started, we lost 97% of the value. Now look, if you have your wages, which are staying the same, but the dollar's going down by 97%, you're so much worse off. But what if your wages stayed the same like the 100 years before the Federal Reserve when it was there, and your wages stayed the same, but your purchasing power went up by 50%? You would be 50% better off. There are solutions out there. One of them might be to get rid of the Fed. Now, I know this is never going to happen. They're never going to require 20% reserves in the bank. They're never going to require 20% down payments on real estate. But this 2020 plan could solve so many of the financial problems that our country is facing. And it could stop the taxpayer, me and you, from having to bail everybody out, from having to bail out these rich cats in Silicon Valley that would have lost, millions and millions of dollars. They're doing a party dance today. They just got all their money back. Look at, who's going to pay for that? They'll tell you Joe Biden will tell you it's not the taxpayer. I'll tell you he's wrong. It is the taxpayer. We'll pay for it in the form of inflation. We'll pay for it in the form of higher taxes. We'll pay for it in so many ways. I mean, it is just wrong what's going on. Get a 20% reserve in the banks. Inflation goes away because credit would tighten up. It'd tighten up and it'd be painful. I'm not saying that's not painful. Banks would be in a lot of trouble. You don't have to instate it all at once. Make it 5% now, 10% 6 months from now, 15% in 2 years. Okay, but we got to get to a 20% reserve in the bank. We got to get to a 20% down payment on real estate. I don't think you should buy property if you don't have 20% down. I have never bought a house with less than 20% down, and I've never ran into a problem even in the downturns I faced. Yeah, the downturns get scary, but when you got 20% down, you probably be all right. Now this big crash is coming. It's going to be a crash of a lifetime, and maybe 20% down's not going to be enough. But you look at houses, I believe in them. I believe in real estate. It's a real thing. It's solid. Look, it's like gold and silver, real thing. The dollar bill, not so real. Dollar bill going away. They're going to push this central bank digital currency on us so fast, you're not even going to see it coming. Anyways, I hope I didn't get too many people upset with this. Get out there, everybody. It's Monday. Have a great day. We'll talk again real soon. Bye-bye now.